Alright, what's good, Chadiana? We are back with another chart video. So, today, I'll get into this later. Actually, I'll just keep it right here. Today we're going to talk about inversions in IFVGs, aka inverse fair value gaps. Alright, now this is very, very, very similar, if not the same thing, but just the opposite of a fair value gap. So, a fair value gap is a 3 candlestick pattern which I marked out right here. And by the way, I took this trade today. Boom. 3 candlestick pattern, not marked out perfectly, but you get the gist. Bottom wick of the first candle, full body of the second, and bottom wick of the third. And we use this gap to locate inefficiencies within the market. So we know when price rebalances, if we see buying or selling pressure, in this case out of it, now we confirmed, okay, we're going to continue going lower. But like I said, everything after liquidity and breakup structure is a continuation confluence. So as you can see, boom, we don't even tap into here, but that definitely did not stop us from going lower, as you can see there. All right, so let's do this right here. Inverse fair value. Okay, an inverse fair value gap is when a traditional fair value gap gets disrespected. In turn, could potentially signal a reversal depending on time frame. Now, we'll get into this as far as strategy creation, probably a couple videos down from now. But I do want to teach you guys all the tools that I use specifically before I start putting every single thing together. Now, inverse fair value gaps are basically a disrespect of a traditional fair value gap. Let me give you an example. Zoom out here and just go to a blank space. All right, so a traditional fair value gap will look something like this. See something like this. Boom. Boom. It's not perfect, but you guys get the point. All right, so this right here would be our gap, right? Because there's an inefficiency, there's a lack of buy orders, right? Let's say this is a bullish fair value gap, so there's a lack of buy orders. I mean, there's a lack of sell orders within here. If we're in a bullish fair value gap, that means, okay, we ran it up. So there's no sell orders within here. So we know if price rebalances in here and boom, we see buying pressure out, fair value gap. Cool. Now, when we see something like this, we see the next candle just boom. I'll make it black because my candles are blue and black. Shade this in so you guys feel it. When you see another candle fully close and like just punch through that jump, fully disrespecting this gap, this right here is considered an inverse fair value gap. And it's the same thing in the opposite direction. So let's get this out of here. Now let's say boom, boom, boom. So where would our fair value gap be? Top wick of the first, full body the second, Boom. Now, if the next candle, since this is a bearish example, hold on, I gotta expand this real quick. Okay, say we're coming down, boom, boom, lower highs, lower lows, something like that. And then we do something like this, and the next candle just fully punches through this gap. This right here would be an inversion to the upside because we fully disrespected and closed and overly fulfilled the lack of buy orders. We even added to it. Okay, and what this represents is a rebalance and a restructuring of where price wants to go, right? So we know that, okay, buyers are in control now after we fulfill this gap. Now, I do want to emphasize, just because you see an inversion on, let's say, the 1 minute doesn't guarantee, okay, price is going to reverse. This is something that you want to use on the 3 minute and up. I'm not, like, you can use it on the 1 minute, but usually you want to see the highest time frame inversion for you to be able to be like, okay, I think price has transitioned in direction. Sorry, I'm looking at my phone. Yeah, you want to have the highest time frame inversion when you're trading. If you want to use an IFBG, an inverse fair value gap, as a signal for reversal. Otherwise, we're going to use our traditional break of structure as a traditional reversal signal. So you want to see a liquidity sweep, break of structure. That's bread and butter. All right. Now let's find examples of IFBGs. Let's see. Let's actually get this out of here. All right, example right here. We see a bearish gap right here form. So we know that there's a lack of buy orders within this range right here. So that we know that, okay, when price taps back in here, if we see buying, or in this case selling pressure out, if we see seller pressure out of this, boom, we'll continue lower. But since we closed above this gap, hold on, let me perfectly. Since we fully closed above this gap, we can now assume that, okay, price has changed direction and invalidated this gap. Okay, an inverse fair value gap is basically an invalidation of a fair value gap. You can see this gap right here. Boom. Gets respected. It comes in there, but it doesn't close within it. So this is just a regular fair value gap. It got respected. It is only an inverse when it gets fully closed above like this to the upside. Okay, so let's do one to the downside now. Let's see. This is a mess. So when we want to see one to the downside, ideally we want to see price going up and then just like a complete invalidation. That's a crazy drop. All right, bet. Okay, boom. We see that's barely a gap. Okay, we'll just do this one. You can see this ginormous bullish fair value gap gets fully disrespected right here, right? So we know that, okay, since it closed below here, now we can assume price will continue lower because why? We invalidated this direction. If we were still bullish, we would react off of this, right? This was an initial bullish reaction, but since we closed below the gap, now we can use this like we can use break of structure as a reversal in direction. So now, okay, now that this gap closed, I could go short here. Boom. We continue lower. All right. Let's find a few more examples. You can find some really good examples on the 15-minute. All right, bet. Boom, we see 15-minute gap here. This is during market open, I believe. What was this? Wednesday. Okay, this is Wednesday on the 11th. This was yesterday. Okay, so boom. We see an inversion of this 15-minute gap. Now we can assume, okay, price is probably going to hit these lows. And what does it do? Hit these lows, boom, continue higher. But you can see as soon as we inverse this gap, this is telling us, okay, this is validation for us to continue lower. And then we only reacted to the upside because what did we hit? This strong level of liquidity. Boom, which also lines up with these highs right here. Boom, right? So let's find another example. Actually, today is the best time. All right, so we see a bullish fair value gap get fully closed through, right? And it broke structure. This is a strong confluence for a reversal in the different direction. So when you get an inverse, you get an inverse fair value gap plus break of structure, you better believe it that we've changed direction. All right, let's find a couple more to the upside. This is probably like one of the simplest concepts. Let's see here. And you can see I'm going even on the weekly time frame because this is applicable on almost every single time frame. This is cool to see on the 1 minute, but ideally you want to see this on really the 3 minute and up. I'll damn near even say the 2 minute. Alright, so we see a fair value gap. Boom. Fully disrespected, right? Boom. We end up actually creating another gap. We see it gets tapped in. Actually gets this is not a disrespectation. Technically, this is not a disrespectation. Why? Because it didn't close under here. So this is not an IFVG. This right here is an IFVG. I'm saying IFVG because it's short for inverse fair value gap. I don't want to say inverse fair value gap every single time. Okay. So we end up creating another gap, filling those lack of orders, and then boom, sending price higher. Let's see another example. Let's go to the monthly. Good example right here. I would say this inversion probably contributed to June's price action. Why? A monthly fair value gap getting disrespected to the upside like this. When you see an inversion like this is omega bullish. And you can see we made a gap up during June. So like going into when we left May and we hit June 1st, we made a significant gap up. All because we inversed. Let's see, where's June 1st? Okay, you can see Monday. Where is market open? Okay, so market open June 1st. Boom. Wait. Yeah, this was just like a crazy bull run. All the way up here. Super crazy. But you can see higher time frame holds higher power. Alright. Now we will get into again everything. We'll put everything together once we get into strategy creation. But in a nutshell, that's all an inverse fair value gap is. It's a invalidation of a fair value gap. That's it. So we see, boom, price is going down. We create this gap. If price fully closes above it, now we can expect price to keep going higher. Same with this one. We see, boom, this gap. If price respected this, this will be a fair value gap. But since it got disrespected, this is now an inverse fair value gap. And now we can use this as a confluence that price will keep going higher. Simple. All right, so that's it for today. And I'll see you guys next video.